Welcome to your virtual CFO coach. I'm your host, Leah Torbert, founder and CEO of Harrington Strategic Partners. I've spent my entire career working in the startup world, scaling businesses to multi-7 and 8 figures. I built this podcast to share all of that knowledge with you and make your path to success shorter and easier. Tune in each week as I cover topics including financial analysis, cash flow management, holistic strategy, mindset, and more. Now for today's episode.
One of the questions I get asked a lot is what's the difference between a tax CPA and a CFO? So in today's episode, I'm going to dive into what each role does and then how they can work together to help you achieve success faster. First, let's define what CPA means. CPA stands for Certified Public Accountant. To become a CPA, you need a bachelor's degree, you have to meet professional experience requirements, and then pass the CPA exam. And then to maintain the CPA designation, you also need to complete continuing education credits. Many accountants choose to sit for the CPA exam because it can open up new professional opportunities. Some CPAs specialize in tax planning, which is what we're going to focus on today. Now, CPAs can become CFOs, but you don't need to be a CPA to be a CFO. Sounds like those word problems back in high school, right? So what does a tax CPA do? Many tax CPAs simply prepare and file the various tax forms that your business is required to file. But I want to focus on tax ninjas today. Tax ninjas are highly trained strategic thinkers. Their role includes tax planning. Tax ninjas develop comprehensive tax strategies to minimize your tax liabilities while maximizing your savings, so they keep more of your profit in your pocket. They analyze your financial data and forecasts to identify tax planning opportunities and advise you on the most tax-efficient ways to structure transactions and operations. So this could include things like creating a corporate structure, including several entities for asset protection and isolating potential liabilities, as well as making sure your investments are structured to maximize tax savings. Another role of the tax ninja is compliance. Now, this is the area most people are familiar with. Your tax ninja is responsible for ensuring compliance with all relevant tax laws, regulations, and filing requirements. They also prepare and file your tax returns and other required reports with the various local, state, and federal agencies. Through continuing education, they also keep up to date on changes in tax legislation so they can advise you on potential impacts. Another part of the tax ninja's role is strategic tax optimization. Tax ninjas analyze your unique financial situation to identify and help you implement tax savings opportunities and recommend strategies for using tax credits, deductions, and incentives. And pertaining to our discussion today, they also collaborate with other financial professionals such as CFOs to integrate tax optimization into your broader financial planning efforts. So communicating with your tax ninja. This is not your typical CPA relationship where you might touch base at the end of the year and then send over financial data to prepare your tax returns. You should keep your tax ninja in the loop on any major financial moves you're considering to understand the potential tax implications and make sure you're not missing any key information to consider. You should also schedule a tax planning meeting every year to discuss potential changes that need to be incorporated and understand how you can best take advantage of opportunities for the next tax year. I've seen tens of thousands of dollars in savings annually going through this process, so don't leave money on the table. Make it a priority this year to find your tax ninja to see how much you could save. Now let's move on to the CFO. Chief Financial Officers have a very critical financial role as well. CFOs are your strategic superheroes. Their role includes a lot of different things, so bear with me as we go through it. Number 1, strategic financial planning. CFOs are in charge of figuring out how to manage your money in the best way for the future. They work with the whole team to set goals that match what the company wants to achieve and look ahead to predict what's going to happen financially so that they can make smart choices about where to spend money. Number 2, risk management. CFOs look out for financial risks and find ways to reduce them so the company stays safe. They keep an eye on what's happening in the economy and with rules and laws that could affect the company's money. Number 3, financial reporting and analysis. CFOs make sure all the financial reports are done right and on time. They give advice on how to make things work better based on how well the company is doing financially, and then they make sure that everything is done the way it's supposed to be, following the rules. Number 4, capital management. CFOs make sure the company has enough money to maintain operations, as well as using surplus cash flow to grow the business wisely. They decide where to invest company money to make the most profit and keep shareholders happy, and talk to banks and investors to make sure the company always has enough money to run smoothly. Number 5, budgeting and forecasting. CFOs also work with different teams to plan how much money the company needs for the year, monitor how the money is spent to find ways to save and do things better, and help teams figure out how to manage their budgets and decide where to spend money. Number 6, stakeholder relations. CFOs talk to people outside the company, like investors, banks, and government officials, and explain how well the company is doing financially and what plans it has for the future, so investors and analysts trust the company and understand how it's doing. Number 7, strategic decision support. CFOs also give advice on how to make the most of opportunities and minimize potential threats. They evaluate potential outcomes and assist leadership with deciding on how money should be spent in the long term to achieve sustainable growth. As a CEO, your tax ninja and CFO superhero can shoulder quite a bit of the responsibility you may be keeping on your own plate, freeing you up to focus on what only you can do to lead your business and achieve your vision. Together, they can leverage your business's unique strengths, minimize its weaknesses, and keep as much of your profits in your bank account as possible, allowing you to achieve your goals even faster. The next question you might be asking yourself is, what do I do if my business isn't big enough to hire a full-time CFO? And that's where my cash flow ignition method comes into play. It's perfect for small business CEOs looking to leverage the power of a CFO on staff without taking on the full cost. The cash flow ignition method teaches you, the CEO, how to lean into your role as CEO and think like a CFO, strategically aligning your business with your personal goals so you can build a sustainable business and have a life at the same time. You learn how to leverage your decisive CEO mindset, fully integrate your operations and financial goals so you can generate predictable cash flow with the cohesive cash flow system, and build your long-term plan for financial success, sidestepping challenges as you go with your cultivated success blueprint. You can learn all about the cash flow ignition method in my free 5-part mini-series by clicking the link in the show notes. You don't have to wait until you can afford that full-time CFO. You can get started right now.
Thanks for listening to today's podcast. If you enjoyed what you heard today, please share with your network and leave a review so our podcast can reach more women and have a greater impact. If you have any comments or additional topics you'd like discussed on the show, let me know. Before you go, connect with me on LinkedIn and let's keep the conversation going.